Good morning, everyone, and welcome to another edition of Bleeding Crypto's Market Update. It's been a long time since I've done a video here from YouTube. I've been really busy with my own group and taking advantage of the market. So I wanted to come here, and I thought this was a great time now that things are kind of calming down. We're taking a little bit of a pause after this incredible run-up that we've had, and a new all-time high was put in. All the demand coming into Bitcoin, watching all these institutions that bashed on Bitcoin back in the day, that said it was a Ponzi, it was garbage, they would never consider it, they would never offer to their clients, now coming in here and singing a completely different tune. How wonderful it is, how it's the future, and it's just amazing to see this space evolve the way it has. So I wanted to make this video basically to kind of calm some nerves down. There'll be some interesting takes on Twitter, on X, I guess we'll call it now, how quickly people's attention or opinions change from we're going to 100,000 to 200,000 to now we're going to 20,000, and they're all over the place. And it's just funny. The longer you're in the space, the more you see those type of behavior, even from people that have been in for a while, even from people that you respect, that you thought knew their stuff, really panic. And I think a lot of it is most of us got caught up in that euphoria of it just going up and up in the demand for these institutional these ETFs coming in that we thought they would never stop. And guess what? We had a halvening, and it's not a mystery. If we go back in time and we look at the halvenings prior, it tells us what the probability outcome is going to happen after the halvening, regardless of what's going on with the ETFs, with the institutions. Markets are markets, and markets behave very similar. So what I wanted to do today is just kind of go over the TA on Bitcoin and what I see moving forward. Also, I had a lot of requests on altcoins, so I'm going to go through those as well. But first of all, I just want to go through the TA of Bitcoin to see where I believe things are headed and what I personally am looking for. Before I continue, I do want to give a disclaimer out. This is a disclaimer that I give out every morning on my private Discord group, just to cover me from all the whiners and incompetent people that are out there that don't know how to work these markets. They come in, they open an account, and they think because they open an account that makes them a trader, and that is so far from the truth. So my disclaimer is I am not a financial advisor. This is not financial advice. I am wrong 99.9% of the time. So if you use real money and you follow me, you have a 99.9% chance of losing it all. This is just for entertainment purposes only. This is just a simulation. So if you want to talk about an ironclad disclaimer, I don't think you can get any more ironclad than that to keep all the crybabies at bay. So let's go ahead and move forward. And again, this is just my opinion. All right. So what I did here, guys, is that I plotted all the halvenings. And this is, we haven't had that many halvenings. So actually the last one was right here. Last one was the week of the 15th. Okay. So what I want to do right now is I just want to go over the behavior of what happens to the price action after the halvening. And again, this won't take very long because it's only been, it hasn't been too many halvenings, but they're all very similar. So let's look at the very first one. Back in 2012, of course, things have changed from 2012 to now. But when you look at the price action, you're going to notice something very similar. And here's what I mean. Here was the halvening. And after the halvening, on this particular halvening here, the week after, yeah, it was a nice week. It had a 6.32% bump in price. But then look what happened. 1, 2, 3, 4 weeks. 4 weeks of absolutely nothing. This one here had a 0.08% change. This one had a 0.09% change. This one had a 1.04% change for the entire week. This one had a 0.03 change for the entire week. Nothing. And then look what happens. After that consolidation period, Look at the effect that the halvening had. All right, so that's one. Let's go to the next one. Let me zoom out here. Here's the next one right here. So let me push this down here. Actually, let me just reset this, and it'll probably be faster just going back here. There we go, 2016. So let's take a look at this happening here, and what happened to the price action on here. Did we just start blowing up? Well, 2016, 2 weeks prior, had a nice dip of 16.67%. Right in here. And this is just accounting the candle body. That's not the entire wick. So let's be fair. Let's just measure the wick real quick here. From tip to tip, it was a 27.64% drop. All right. So then next week, not much, 3% to the positive. The week of the halvening, 1.33 to the negative. Not a great bit. The next week, nothing really too crazy. 4.63% to the positive, and then we had another dip. All right. But this is really what I want you to take away from this. After all of the volatility here and here, look at what we did. 1, 2, 3, 4, 5, 6, 7, 8, 9. I was 9 weeks of basically nothing. Look at the size of these candles. 0.81%. 1.77%. It wasn't until this candle here that finally we started to see some movement. And it wasn't a lot, but yet that's where it really started to move. Here, it just went sideways. What did I say? Like 9 weeks? 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks. 8 weeks of basically just sideways. Then, again, we started to see that move to the upside. Was it void of volatility? No. Had its volatility on the way up. We're always going to see that volatility. We're always going to see those flush outs. We're going to see all the people that think they're smart in the market come on in. Market teaches them a lesson, flushes them out. It doesn't stop. I mean, all the way to the top. All you saw was these massive flush outs for the market makers, basically shaking out people thinking that they're going to come in with 100x leverage and they're going to ride it all the way up. The market says, no, you're not. No, you're not. So it flushes them out. So we fast forward to 2020. Fast forward to 2020. We have the halvening. We're recovering from the black swan from COVID. We're moving up. We have the halvening, but then look what happens. Really not much. We had the next week, we had a 10% minus, a 9.87% negative. Next week, 8.41. So just up and down, basically just a channel. If you look at this, you can clearly see that channel. And we hung around the middle part of that channel. But 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of just staying within this price range inside of the $9,000. It wasn't until this week here that we break the 10,000 and we start moving up. We come back down in here into the low 10,000s, and then we take off. But this is my point. Once again, sideways for weeks. Now, fast forward to now. We have a couple of down days, very similar to 2016. We're actually having some down weeks before. What? We go sideways. Back then they went. Now we cannot look at that and say, okay, we have to go sideways for 8 weeks. No, not at all. That's not what I'm saying. But what I am saying is pay attention to the pattern. We don't have the halvening and then explode to all-time high. As a matter of fact, this halvening was different in the sense that we hit all-time high before the halvening. So that's something that we didn't have on prior halvenings. But the price action so far, there's nothing different. There's nothing different really going on when we take a look at this halvening. Now, everyone's question is going to be, where are we going from here, BC? What's going to happen today? What's going to happen tomorrow? What's going to happen next week? Honestly, it doesn't matter. It doesn't matter. You know what matters? What matters is what the price action, the PA, tells us. And it's simple. Look, let's go to the daily time frame. When you look at the daily time frames, where are we? We're in a channel. And if you want me to give you my opinion, I'll tell you, I'm bullish. I am very bullish. And let me explain to you why. Let me show you why I'm bullish. Let me move this out of my way here. Move this out of my way. No, actually, let me do this here. All right, sorry about that. I'm just trying to get my parallel channel here. Let me get saved it here into my toolbar. Here's my channel. So if you want to ask me, am I bearish or am I bullish? I have to say that I am bullish for this reason. But I'm going to also give you my invalidation. So let me just show you right in here. We'll bring this down here. Let me just move this in here. Okay. When I look at this, guys, to me, I'm bullish. To me, this is pretty much, I'm looking at this as a bull flag within this channel. And we're not doing much. We had a little bit of deviation above it, we had a little deviation below it, and all we're doing, look how well this medium line is respected. If we go down into the bottom of the channel, guess what? We can go down to 58,300 and still be within this channel. And then bounce and go to the top or stop at the medium line. If we look at this market structure, so if we take this and we just hide all the drawings, what is this? It's a beautiful double bottom, beautiful W. I rely on W's and M's quite a bit for market structures to give me a hint on which direction the market's going to go. This to me is extremely bullish. Now, we can also do something that's very common. We can sweep these lows. We can come down, wick below here, sweep these lows, knock the stops out, grab that liquidity, and guess what? We're back up here. And the funny thing is that we can go from here, everybody calling for, oh my God, it's over from 20, we're going to 20,000, 30,000. Next week, or even this week, we're up here, and guess what? Everybody's back to $100,000. That's the emotional roller coaster that everybody seems to be going through right now. Kind of the reason why I want to make this video, just to show you that whether we're going to go up here or whether we're going to go down here, it doesn't matter. What matters is what the price action is going to tell you. So let me explain to you my point of view and what I'm looking for and what's going to invalidate that. There's only two things here. There's only two things actually that you need to worry about when you're looking at price action. Two things, that's it. And if you focus on these two things, it's going to make your trading life much, much simpler. Two words, validation and invalidation. That's it. Do you know why? Because none of us have a crystal ball. None of us know exactly where it's going to go. However, market structures, because they're built on algos, they tend to rhyme with previous market structures. And when they don't, they have very similar behavior. And I'm going to touch into that. And what I mean by that is going to be back testing. Back testing gives us a confirmation more often than not on the direction of where we're going to go. And I'm going to show you examples of that, of what I mean by that. But first, let me just finish my thought here as far as why I'm bullish. I'm inside of this channel here. I consider this, it might not be the most perfect bull flag. It's still a bull flag in my book. It's still bullish. I still expect more upside. Now, what I'm expecting is a move down here. You see this big wick here, all this liquidity here? I expect to come down here and grab some of this liquidity. If not, at least come and do a sweep. Very often we'll do a sweep of the lows before we go higher. And you can go to the left and you can see that. Let me show you an example of this. See this flag here? See this pennant? We break out. What does everyone do here? What does everyone do here on this candle? You guys all know it. You guys all know the answer. Everyone jumps in on longs. You think the market makers are here to say, look at Twitter. Oh, let's pay them. Let's take our hard-earned money and let's pay them. No, it's the opposite. They look at you guys and they're like, look at these idiots. They're all jumping in on longs, high leverage, kumbaya. They come in and not only do they take it away, but they sweep the lows. This candle, look, they sweep the lows. And then what? Then they go up. They were going to go up on here. The only reason we put this candle is because of the leverage longs. The market was not going to pay you guys. And they do that time and time again, and most people do not see that. I use two two programs to help me identify those when market is heavy on one side to the other, shorts or longs, and that's going to be daily DCT's tool and high block. High block and DCT tools are, to me, essential because they help me to see where those orders lay, where they're at, and it gives me with a high probability what the next move is. And that's what I do with my team 7 days a week. We look at that data, we map out the plan for the day, and we look for probability, for high probability direction, and we tend to follow those areas, and they do really well. Is it 100%? No, nothing is 100%. But again, it's all about the probabilities. So when I'm looking at this here, and I'm looking at this here, I'm looking at this structure, yeah, I cannot get bearish when I'm looking at the possible completion of a very, very bullish structure, expecting a sweep. Look to the left, guys. Look over here. Look at this downside here. Look at this sweep here. And then we start pushing up. We push up, stair step, put in this nice flag. Look at this flag right here. Look at this move. Look at this flag. Look at this move. Look at this flag. Look at this move. Yes, this flag, it looks very different than these, but it hasn't broken really any structure. It's within a disciplined channel. Here or here, a sweep of here is what I'm looking for, a reversal. Now, if it doesn't, what's my next step? It's funny, I posted this on Twitter, and it's hilarious. The emotions that run on Twitter. I posted this as a target, as a possibility of coming down here. If we were to lose the sweep of these lows here. And I don't know if it's because there's a lot of people from other countries and people who are not very fluent in English. They tend to only know some of the main words, but a lot of people from other countries that don't speak English very well, they don't know what if means or what maybe means. So let me teach you what that means before we go any further. If means that it may or it may not. If means if it does do it, then this. So if isn't something that's certainty, isn't a certainty, it's in case it does. So now, same thing with maybe. It maybe happen, but it's incredible when the emotions are high, they overlook those words. Now, if we do not sweep these lows and push higher, then I will expect a move here. Now, why here? Why here? Well, it's really simple to me. Reason being is that I recognize these types of moves, and I also recognize that the market likes to backtest a lot. So when I look at this resistance area here, and I look at this upthrust here, it lacks something. It lacks a backtest. Markets like to backtest the areas of where the bull break happens. They like to reinforce that the bulls were present, are present, and will continue to defend these areas. This is 53, about 53,000, 52,829. But again, just for the sake of keeping around numbers, $53,000 area. But before that happens, I need to see us break here. I need to see us trade below here. I need to go to lower time frames and look for a bearish market structure. Then, when we lose it, I want to see the confirmation, because it can just be a deviation, like we had a deviation here, like we had a deviation here. If all of those things are met, then there's an opportunity. There's no reason to get all panicky or scared about it. It's an opportunity to make money, to move with the market instead of moving against the market. And here would be a very logical step to come down here and backtest this area. As a matter of fact, here, let me show you something. Watch this. Go here. Look, back test. Again, if we come back in here, I don't know if you guys saw this here. Look at this. Look at this. Look at this. Check this out, guys. Where's my here we go. Look at this. You see this resistance right in here? He says we came up here, we hit the resistance here, candle body here, wick here. Look, here we blew through this. We blew through this. We didn't back test this. It was just one big upthrust, massive upthrust. Look what the market did. Look what the market did. You see this? Confirmed it. Yep. The bulls were here. The bulls showed up again. The bulls showed up again. You see that? The market, and did it happen right away because you needed it to happen? Because you're in a hurry and it has to happen right away? No. This broke out of this resistance. The bulls showed up on October 14th, 2023. January 12th, 2015. What is that? About a year and 4 months or so? Did it have to happen right away? No, it didn't have to happen. It doesn't have to do anything. But the fact that it does is the only thing that matters. The fact that it has a high probability of coming back and checking areas like this is something that you need to take notice of. You need to understand how these price actions, how the market likes to close these areas. We come in here. Look at this here. Look at this major resistance. It actually resembles what we have right now. So if you look at this whole area here, look at this. Look at this right here. Resistance, 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 resistance. All of this resistance here, resistance. Look at this upthrust. Upthrust, beautiful upthrust. Look at where we fell. Look at what we did. Just right there, checked it. Bulls were here. Bulls showed up. Good. Great. Let's go. Do you see that? It's not that difficult. It really is not that difficult. If you know where to look, if you don't panic, all the answers, I'm always telling you guys, look to the left and it's going to give you all the answers you need. Now we're here. We're back here. Same exact thing as 2012, as 2016. Upthrust. We didn't backtest it. Do we have to backtest it? No, we don't have to. But the point of this is that if it does come down here, it makes sense. And there's that word again. You heard that word, right, guys? If. It's an I and an F. If it does invalidate here and it does come here, that's my next step. I'm not looking for 20, 30, 40,000. Looking for right here. Does it mean that 20,000 can never happen? 30,000 can never happen? Yeah, I can. But guess what? It needs to prove it to me. We can sit here and talk about the next target, the next target. Why? What's the point of that? Who cares? Take whatever opportunity the market gives you. If the market gives you an opportunity and it gives you a signal down here, take it. Make money. If the market gives you an opportunity here and it puts a signal to go up, take it. If it puts the signal down here for a more downside, take it. Who cares? Why are you so worried about the direction rather than looking for the opportunity? It makes zero sense to me. Let's look at some of these indicators as well. Let's look at some of these indicators. Weekly MACD, does it look good? Nope, it doesn't look good. We went up. We went up really fast, pushing a lot of these indicators pretty high. However, does this mean that it has to go all the way back down and reset? No. No, it doesn't. Go over here. Is this on here? Yeah. Okay. We did put a red volume oscillator on this week that's still open. It still has 6 days and 10 hours to go. However, we could turn around. We can come back down just a little bit. We could do something like this. We could deflect off of here. If we were to push up this week, this cross would get negated and we'll just have a deflection and we'll go higher. Very similar to here. Very similar to here. This would push up and reflect and deflect and continue to go up. Now, yes, we do have a bear divergence on here. We do have with the RSI, we do have a bear divergence. And let me walk you through it. You see the top of here, this RSI, on the oversold, we were at 84 points. That's this week right here at 45,000. No, excuse me. I'm so sorry. We do not have a bear divergence. Excuse me. We don't. This is a bear divergence. Excuse me. I was looking here and I'm looking over here and I'm talking about this here. This is a bear divergence right here. You see this RSI here at 41,000? You see how the price action continued to climb higher and we continue to go lower? That's a bear divergence. Do you see how we put another peak up here? And look how much lower we were here. And yet we had a higher high here. That's a bear divergence. And then look, subsequently what happens. Here, yeah, we went to overbought, but there's no real bear divergence going on here. We're just hitting these highs. We're resetting. Now, we could easily stay in here. This does not mean that if we go here, we have to go all the way back down. Price action has to go all the way back down because there's two ways to reset this. One with price and one that would drive you guys crazy with time. This can come down and the price action stays up here. That would be the ultimate max pain for 99% of you guys listening. Because you're such in a hurry. You need everything to just go, 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 go. And when it doesn't, everyone freaks out. The children get scared. Everyone freaks out. Where do you think the market makers would tend to make the most money? A quick reset with price or with time? Keeping you guys guessing. Keeping you guys making moves because you're bored. And you need to do something, and you're looking at the chart 7 days a week, 13, 15 hours a day. Every little small move is magnified. You're tired, you're exhausted, you need something to happen, and you think because you go into a position, that's when something's going to happen. No, it's not. It's going to take its time. It's going to take its time, and it's going to do what it's going to do when it benefits the market makers, which is why I like looking at the data that reflects that. It reflects the positions that people are in. That's why we study that with my team every day to see where those small moves at. The bigger moves right now, very difficult. But there's a lot of small moves that happen. A lot of opportunity every single day for those smaller moves. I'm not going to get into the small moves right now. There's no need for that. This isn't what this is for. This is to give you a better sense and just a different insight to where we could go, what the possibilities are, some of the things that I'm looking for. Let me just I don't need an indicator. We can just look at price action. Now, look at this here. On the weekly time frame. Again, this to me, bull flag. There's different ways to see a bull flag. One of them is when you have the pole and you have the downsloping PA, then you have that explosion. Or you have the pole and you have the sideways consolidation. Sideways consolidation, then you have the liftoff. There's different ways that these bull flags present themselves. Look, here's a beautiful W. Here's a market structure that I like to play off quite often. Quite often, We have this market structure. We break out. Look, we stair-stepped. We had a nice little flag here. Not a lot of follow through. We dumped out a little bit more. We cleaned some of these. We knocked out some of these stops. We did basically sweep some of those lows. Right in here, if you look at where we stopped here, a lot of the times, guys, when things are random, they seem random. They're not. And if you want to know why this stopped right here, just do this. Just do this. Snap a line at the bottom and look left. Why did it stop there? Prior resistance. Prior resistance is what you need to be looking at when you're above and you're coming down. You're not looking for prior support. You're looking for prior resistance, because prior resistance is usually the first stop. Even if it's going to go lower, it'll most likely going to stop at that prior resistance. This came down here. Why did it stop there? Why did this stop there? Resistance, 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 resistance. There's always a reason. There's always a reason. But when you're so close and you're so zoomed in, you're not paying attention. This put in a nice, look, it's not the prettiest of flags. And honestly, I probably won't even consider this a flag, because it's this flag gave back too much. Usually on a flag pattern, what I want to see is a 0.32 or a point, no less than a 0.50, and then a bounce. All right. I don't think this did it, but you know what? Actually, let me check. I call it a continuation rule. And it might have. I don't know. Let me see here. Let me look over here. As long as it doesn't close below the continuation rule, this one didn't. Actually, I was wrong on that. It actually did respect the continuation rule. This just seemed a little bit, when I'm looking at it, it didn't seem like it would have, but it did. It did not close below 0.50. It stayed with the continuation rule. And this rule normally says we're going to see a bounce. But you know what it doesn't? And then we got the bounce. But you know what it doesn't do? It doesn't guarantee that we're going to go and put a higher high. As a matter of fact, this one here barely covered a higher high, barely put in a higher high. However, it had no follow through. And look at what it did. Look at how beautiful TA respects. Came down, back tested it again. And then we did the up thrust that I was hoping we would see here. We did it here. But again, we kept that respect inside of that market structure. And these are the type of things that most people don't pay attention. Most people, they don't even see the beauty of technical analysis. But when you take a step back, take a break from watching the smaller time frames, and you pay attention to the higher time frames, and you see how the price action flows, how the market structures are created, it helps you keep a better sense in real time what to expect. Now that I showed you all those back tests and all those formations, when you look at this here, it makes it a little bit more sense. So let's do this. I'm going to erase the happening. I'm going to remove this channel, and let's take a look at this. I'm going to put the same continuation rule that we did here. Now, I'm not putting it here for a reason. We had to move to the upside, okay? Now, remember what I said. The reset of indicators happens one of two ways. Through price, right here, or through time. The consolidation of this here on the weekly negated needing to respect the continuation rule. We didn't have that here. We had a move to the upside and a straight down. But yet, look, we haven't even broken 382. We haven't even broken 382. And if you want to test my theory about why didn't I not use a continuation rule, watch this. Here, we can do this. You can put a harmonic pattern. Here was a low. Here was the top of that move. The low of this move. here, look. That harmonic pattern, we went a little bit higher. Yeah, we deviated a little bit below it, but we're right back down to it. We're right back to it. Simple. Not that difficult. It's, again, when you look at it, when you're calm, you look at it, you're not panicking, you can really understand that these types of patterns, very common. Very common. Now, let me go back and put this continuation rule here. Okay. This here is what I was talking about earlier on the daily time frame for that resistance right here. For that resistance. Let me go to the weekly just because it cleans up the charts a little bit better, gives it a little bit more real estate. Now, after going over what I just showed you here and what I just showed you in 2012, what I just showed you in 2016, can you see why coming down here is not that big of a deal? It doesn't mean that it's guaranteed that it has to bounce off of here, but it's not doing anything out of the ordinary. It's not doom and gloom. It's just TA doing what TA does. Look at this. Look. Again, random stop, snap a line. Was it really random? Look, resistance, resistance, resistance. It took off. It never back tested. Boom. Back tested right there. Consolidated here. Nice push up. We never back tested. How is that being ultra bearish? How is that doom and gloom? How is that a black swan? How is that crazy to think that we cannot come back to this level? No. Easy. It's not that difficult for us to assume, or not even assume, but plan for a possibility that if we lose a continuation rule, that we come in here. Now, if we do close below a continuation rule and we invalidate this, you know what's my next step? My next step is going to be golden fib. These three fib settings here is what I use if and when I invalidate the continuation rule. I'm always going, in a bull market, I'm going to give the benefit of the doubt to the bulls. The continuation rule is a much bullish stance. However, can it invalidate? Absolutely, it can invalidate. Now, if it does invalidate, what do I panic? No. Next rule is going to be here, where we can come in here and we can consolidate, we can reload, and we can bounce. Is it guaranteed? Absolutely not. But it has a high probability. And look at this. Do you guys notice something? Look at what 618 is. Look where it lines up. Look where it lines up. The golden rule. 618. Yet you want to panic? 618 and 786, those are part of the Fibonacci count. 706 is not a Fibonacci count, but it's one that I use because it works very often than not. Okay, we usually bounce more often off of 706 than any of these two. Than any of these two combined. 706, we normally see a bounce off of there. But doesn't mean it can't come down to hit 786. And look where 786 lines up. Look where it lines up. Right there with that. So does 706. 706 lines up to this wick perfectly. And 786 lines up to this wick. Absolutely perfect. Let me snap a line just to show you. 786, look at that. Beautiful lineup. Let me put this in yellow. And then the next wick, 706. Again, is this cause to panic? And this is a backup. This is plan B. But I'd rather have a plan B than waiting for my bounce to invalidate and then trying to figure out, whoa, what do I do next? What do I do next? Because often what happens is when you have up thrusts like this, the downward move is very quick and you lose the opportunity here. Because the opportunity comes in two ways. Opportunity comes if we sweep the lows and we bounce, opportunity number one. But If opportunity number one doesn't present itself, opportunity number two will. Market's going to go one way or another. It's either going to go up or going to go down. Yes, it can consolidate, but even after consolidation, it's going somewhere. It's either going to go up, it's going to go down. It's not going to go sideways for the next 10 years. We know that. So we know that even if it consolidates, it's going to lead to a move. The smaller time frames, the market structures on the small time frames gives us those directions, and that's what I teach. That's what I show my students. Now, again, I'm not going into that right now. That's not what this video is about. This video is about addressing a lot of the panic and also a lot of the moon boys, because as much as I'm bullish, I'm not putting all my eggs there. I'm going to allow the market to say, hey, yeah, great. It worked out. Great. If it doesn't, great. Either way, win. Why? Because I have a plan. And as long as you have a plan, there's no need to panic. All right. So that being said, I think I was pretty clear on what's going on, my views, better said, on Bitcoin. So let's do this. Let's look at Ethereum and take some requests. Let's take it at Ethereum. Now, keep in mind that Ethereum is going to follow, we'll do the index, is going to follow Bitcoin very closely. And as a matter of fact, you look at the price action here, and it's very close to what Bitcoin is doing. So there's not really much to talk about when it comes to Ethereum, only because of that reason. Very, very seldomly does Ethereum lead the market. So it's not going to be something that I am going to put more stock in. So what I mean by that is, if I see an incredible setup on Ethereum, I'm not going to assume that because the setup is there, guess what? We're going to go higher. No, we all know this setup can be as bullish as possible, as we want it to be. Bitcoin drops, this is dropping with it. This is dropping with it. The last time I saw Ethereum carry the market was back in 2022, when it had that protocol, that IP 456 or 4459, something like that. And Ethereum was literally dragging Bitcoin up with it. But it was a big deal. That was a big change, a big upgrade to Ethereum. Those are far and few in between. Right now, there's nothing like that. So when we're in a normal environment, I'm not going to rely on Ethereum to push the market. I am going to take note that we came down to the golden pocket and we did have a nice bounce. We came down again and we bounced again. So I'm going to take note that this is a very strong area where the bulls are coming in. They're stepping in and they are defending the market. They like this area. Doesn't mean they cannot lose it, but I like the reaction here, because this reaction gives us opportunity. How does that give us opportunity? Because guess what? These bounces are 11%. You know what that means, guys? If you have a 10x, which is fairly low leverage, that's 110%, 116% bounces. That's not significant. Week 1 and 2 weeks in a row? 2 weeks in a row, that's not good enough for you guys? 116% ROI is not good enough? I mean, there's opportunity everywhere in this market at all times. It just depends on, do you trust your TA? And if you're saying, well, I don't have a TA, well, that's the problem right there. That's probably why you're panicking. Because you should never be trading unless you have years and years of proven experience with your TA. And if you don't, that's okay. Because here's what's going to happen. People like me, other people on Twitter that are very experienced as well, people in my team, we're here to take your money. That's the reality of it. Okay? It might not something that you want to hear, but that's the reality of it. Every single time, even you who's not experienced, when you win on a trade, you took it from someone. It doesn't just magically appear. You took it from someone. So people like you is what feeds experienced traders. But here's how it's going to help you. One day you're going to get tired of giving your money to someone who's smarter than you. Because that's what it is. When you lose on a trade, you lost to someone who was smarter than you. They outsmarted you. And they took your money. Does it happen to me? Absolutely. I just said in the disclaimer in the very beginning, 99.9% of the time. That's why you shouldn't follow anything I say. I'm not a financial advisor. I'm telling you how they take my money every single time, 99.9% of the time. That's how it happens, guys. So one day you will wake up and say enough is enough. You're either going to walk away and quit, or you're going to do what every single experienced trader has done. They say enough is enough. I need to learn. I need to put the time in. I need to manage my losses. I need to minimize my losses. I'm going to lose, but I need to lose less. Oh, I need to lose less often. And I need to start getting some wins. And I need my wins to run more. They need to matter more than my losses. When you start shifting that, that's when you start becoming a trader. That doesn't make you a trader. The only thing that makes you a trader is going to be experiencing the losses. That's step number one. And step number two is reversing that ratio and with time. Very similar to how we look for setups. Through time or price. But unfortunately, most people, it goes through price first, meaning that you lose money first. And then through time, you become an expert. So, Ethereum, we gotta wait. We had a nice bounce, nice reaction, nice opportunity, market structure. I like it. I'm bullish on Ethereum, but I've always been bullish on Ethereum. But I also recognize that in this cycle, there's other competing ecosystems because people are tired of paying those high fees. People don't like paying high fees. When you have networks like Solana, like Base coming in, Base is going to be incredibly huge. Incredibly huge. For a simple reason, guys. It's not that complicated. You don't have to have a degree in computer science to understand, or in cryptology or whatever they call it, to understand why Base is going to be big. You just have to have something that actually a lot of people lack. Common sense. Base is part of Coinbase. Base is going to allow the 100+ million users of Coinbase to come in and experience what the rest of Twitter X is experiencing with the meme coins and the other coins that are not listed on centralized exchanges, in an easy to use, trusted exchange. Well, I wouldn't call it an exchange, a DEX, decentralized exchange. Because the reality is, guys, the public's not going to come in. They're not going to open up a phantom wallet. They're not going to be plugging in. They're not going to be risking, or they may, but they're going to lose interest really quick. And all the scams that are out there, when they can easily play around and do what you guys are doing, and when they come on Twitter and they read all the stuff you're doing on Base. Why? Because it's backed by Coinbase. Does it mean that it's never going to have any scams? No. But it's going to be vetted much better than any other DEX. And it's going to already have a user base with the people come in and say, okay, well, I'm already have a Coinbase account. It's an easy transition to Base. I can get the meme coins and I can participate. I can play around with those 1,000, 10,000%, but without leaving comfort zone. You know how it is, guys. Most people like the comfort zone. They don't want to go out and make it more complicated if they don't have to. So it's common sense that Base is going to do very, very well, which is why you've heard me talk about Arrow. Arrow is, think of the beefy of Binance Smart Chain back in the last cycle. All the liquidity coming in. Remember how beefy was, like everybody was all over beefy, all the TVLs, all the pools. That's what Arrow is going to be for Coinbase. And look what it's doing. The exact same thing we talked about. I posted this chart here. No, BC, this is never going to come down. You're not this one. This one's too big. It can never go back and back test that. It'll never happen. See, BC is consolidating. It's going to leave you behind. You're not BC. That's it. Sorry, buddy. Sorry, bud. You should have listened. You should have listened. You should have stocked up here. You should have loaded the bag here. It's okay. I have a lot of years of experience, and all of these coins, they behave the same exact thing. Price action is price action. Profit taking is profit taking. Stupidity is stupidity. And that's who we make money off. Remember, when you win in a trade, you took it, someone smarter than you took it from you. They were the smart ones, you were the stupid ones. How many people are panicking? Rather than just sit back. Sit back and let the market do what it's going to do. Doesn't mean you're not scaling in. This is your target. I'd never advise for you to wait for the tippy pico bottom. Why? Because I've also seen where it can get front run, and we don't know where it's going to get front run. However, when you believe in a project, when you look at a project, when you've researched a project and you see the potential of a project, it's easier to just scale in. It's no different than if you were to buy, if you bought Bitcoin, you didn't buy Bitcoin at $3,200, but you bought it at $6,000, fucking twice in 2018. You did not buy it at 32, but you stepped in at 6,000 or 6,400 when it went 100%. What an idiot! What a fool! You think you're a fool now? So you think that stepping in and buying it at 143 instead of 84 cents, or buying it at 143, at 122, at 106, and at 84, any of these prices, when this thing is 40, 50 bucks? Do you think you're going to you think you're going to be called an idiot for buying it at 144? You really think you're going to be an idiot for buying 144? I don't think you're going to be. This guy was an incredible hero. Wow, he was so smart. He got so lucky. That's everybody's favorite word, to make themselves feel better that they missed out. He just got lucky. No, it's not luck. When you research, you do the work, you plan the trade, and you execute, that's not luck. That's called a trader. If you think it's luck, it's because you're not a trader. Guys, this thing's going to be massive. But don't take my word for it, because I'm wrong 99.9% of the time. But I'm going to step in. And hopefully, I get that 0.1%. And it works in my favor. Hopefully. But look, the TA is the TA. And it is a thing of beauty. And it doesn't matter what asset. Does not matter what asset we're looking at. So let's look at some of the I've got Rose that was requested. So let's look at Rose. USDT. All right, so let's look at Rose. You know what? I don't need all these. I don't need all these indicators. I'm going to just hide indicators. I'm just going to look at price actions. All we need is price action. Just go to the high time frames. Okay, we're on the daily time frame. Perfect. So let's just reset the screen here. What are we doing? What have we done? Well, first things first, I want to get you in the habit of doing something. I want you in the habit of doing what back testing. This is how you're going to learn back test. Normally, what I do for back test, I just grab one of these bars. I look at these areas here. I look at the tops and I think, okay, these are areas that if we're up here, when we come down, we're going to stop at these areas. So let me look over here. Let me see here. This is, I like this here. This is a good area. So if we're up here and we're looking for the price to come down, I'm going to assume that we're going to hit these areas here. Does it mean it's going to hit here and reverse and go to all-time high? No, I'm not looking at that. I'm looking at where's an opportunity to make money if I short it and I want to take some profit. Where is a good chance where we're going to stop? Here's a good chance. Here's another chance. Let's look over here. I like this top here. Okay. I like this top right. Let me see here. I like this one here. Let me look at these candles. I love candle bodies over anything else. Okay, I'm going to do candle bodies. Candle bodies to me carry more weight. We have wicks, cover the wicks. Okay, now let's do this. Let's look at the top and let's see where it came down. We're right here. Look left. Huh. What a surprise. What a surprise. Now, what did we do? Came back up. We tried to bounce. Support. We broke it. We came down. We back tested. And we confirmed. Now, what I like to do is when I look at stuff like this, like I said, I go to, this is not a teaching thing. I was going to show you what I do for lower time frames, but again, it doesn't matter. That's not what this is about. Next one right here. Next one was this right here. We came down. Where do we stop? Right there. Look at that. Right there. Again, not that difficult. Look at that. And then the last one here, no surprise. No surprise at all. Now, is it done? Is this done? Can it continue to go? I don't know, but I can map out levels. I can look at the entire move now. Normally, I would not have I would put a fib from here to here, but you can obviously see where we gave that back. We gave all that back. So what I'm going to do is I'm going to measure the entire move, including this reset here, this retracement here. Just want to see where have we respected. This was the bottom of this entire move. This is the top. Swing low to swing high. We're consolidating right on golden fib 618. We came close to 78. Well, actually, anything that's between here and here, I consider 786. So we hit 786, and we bounced beautifully right above that. So, Rec Bulla, who wanted to know about Rose. Here's what I'm looking for now, Rec. Let the market prove it to me that this is a good buy. I'm going to go to the lower time frames. Go to the hourly. Now, what am I looking for? I'm looking for market structure. I'm looking for something here that tells me that we have a potential to go higher. Now, is it going to go straight up like a rocket? No, because now we have to play the inverse of what I showed you a little bit ago. That inverse is going to be this. You see this? I'm going to make this red. You see all of this support? Support. Guess what, Rec Bulla? This is now what you're going to have to contend on the way up. Here, as well as here. So if you can break above here, great. If you can break above here, great. But now you can think of it as opportunity. Can you make money from here to here and take your profit? Well, BC, why take your profit so soon if we're going to go to all-time high? Well, if you're a trader, you want to pay yourself, first of all. And you see how much support was here. You think you're going to blow right through it? Chances are not. So you take your profit. If it reclaims this area and you have another bullish market structure or consolidation and you want to take you want to take a risk and minimize the losses in case it rolls over, take it. Here's your next level. There's another trade. But you know what the problem is with most people? They want to catch the Pico bottom and they want to catch the Pico top and they don't want to lose a single penny. So they don't want to get out of here and then get back in here. Oh my God, BC, I sold it at 97.09 and now I'm buying it at 97.33. Oh my God, it's the end of the world. I'm a fraction of a penny, a tenth of a penny. I gotta give up a 1,000th of a penny. I gotta give up. That's how ridiculous people are. That's how ridiculous people are. They will complain about stuff like that, rather than saying, oh my God, I got paid. Hell yeah. Here's another opportunity. Boom, I got paid again. Great. Are we going to go higher? I don't know. Prove it to me. Consolidate here. I'll make money again here. Consolidate up here. I'm going to make money up here. Level by level by level by level. I don't worry about all of this. Shrink it down. Give yourself a grid pattern and try to make a move within that grid. Stay in your lane. Now, if you're not a trader and you're an investor, no business looking at the hourly time frame. Look at the weekly time frame. You say to yourself, we went down. We have a 70 almost an 80% discount. Nice bounce. What does this project do? Does it have a use case? If you believe in the use case, great retracement. People loved it here. Well, you should love it even more here. Buy it. I'm just giving you an example for those wannabe traders. What you want to be looking for. Let's look at Woo. Woo is another one in request. Let's see. Woo. Very similar. Very similar. It's funny. I remember seeing this and people talking about, oh man, this is never coming down. This is just going for it. Let's see. Look at the harmonic pattern. Did it complete the harmonic pattern? God, I love harmonic patterns. Look at that. Look at that. Beautiful harmonic pattern. Nice retracement. Here we go. Now, let's do this. Look at price action here. Let's go to the daily. Okay, right here on this daily. And let's do this. Let's look for prior resistance. Okay, so we had resistance there, resistance there, resistance there, there, here. Okay, I like that one. And what's another resistance above? This is kind of obvious right here on this. Let me find just candle bodies. Give me 1 second. I like looking at candle bodies just to refine it just a little bit more. Maybe I'll do it right there. These two, we have one set of candle bodies, another set of candle bodies. What do we have here? Yep, another third set of candle bodies. That's perfect. That's what I like. Now, let's reset. Reset this. We were up here. We came down. Was this a point of support? Huh. What do you know? Bounced. Next candle wasn't so good. Came down. Back tested it. But now it consolidated. Reclaimed. Right on that area. Right on the exact line that we mapped out from here. See how that works, guys? Not that difficult. Not that difficult at all. And then the next area is where the bottom was. You notice that I didn't look at where this was. I didn't snap a line from here. All I did was go back here, look at this, and this told me of the probability if we come down where we're going to bounce. And I did it live, so none of you guys can say that, oh, he cheated or he looked at here. No, I didn't have to look at here. All I have to do is understand the probabilities. That's it. That's all I have to understand. You see how simple that is? Now, I'm sure Rick Bulla is going to be like, okay, well, now what, BC? Well, this is what I see here. Let me do this. Let me erase this stuff here. Erase this. Let me look at and go to the weekly. Let me see, did we respect the reload zone on the entire move? Let's see, from the swing high to the swing low. Yep, we didn't. We had a wick below 786, but again, I don't count the wicks. I count the candle bodies. Beautiful. Did not close, is right up here. Right at 706 is consolidating. I like it. I like this. I like this. If this can maintain a consolidation here, and if you're a trader, go down to the hourly time frame. Let's look. Is there any bullish setups? Okay, we have put an M. We finished that M out here. We're consolidating here. Can I get a W? Can I get a W forming in here? If I get a W forming in here, what's my trade? Oh, my trade is right here. My trade's going to be, let's see here. Let me confirm. Hold on. I like it there, like it there, like it there. I like that. Let me see what's the behavior here. What's the behavior? Oh, sorry. What's the behavior? Yep, beautiful. Love it. Okay. I like this. This is a good trade. How is this a good trade? It looks a little BC. I don't know. I like using 10x. That's a 38% trade. Is that little? Would I be happy with 38%? I think so, but not in this space. In this space, if you're not batting 1,000% or a 900% trade, then nobody wants it. That's okay. That's okay. A consistent trader will take 38% all day long. All day long. So I like it. I like that trade. You can go down even lower. I would like to see a W forming. Could a W already form within that? I don't know. Let me see. There's no W per se that I really see. However, what I do see is a consistent stepping up by the bulls here. They consistently stepped up and they flipped resistance into support on the smaller time frames. Look what they did here. Look, right in here. Right here, you can see support, then became resistance, and then look, this upthrust candle flipped it, and we're back into support, and we're climbing. I like it. I like it. Did you catch this consolidation? You didn't, but if you can manage your risk, you have a 38% probability. Excuse me, not probability. You have a 38% chance of an ROI. A chance of a 38%. That's what I meant to say. A chance of a 38% ROI. However, if you want to use this as a stop, if we come here and we break below here, get out. Get out. Get out. So you need to manage if that's worth it for you. And of course, it's going to also depend on how much money are you putting on that trade. So there's a lot of factors. There's a lot of factors that people need to understand and need to know what to consider. Okay, now another one is Doge. Let's look at Doge. Go to the weekly. Doge looks fantastic. Fantastic. Wow. Okay, so, what a bull. So we had a move here. Swing high, swing low, right into that reload zone. Boom, bounced off 618. Beautiful move. Let's see. Right here, we had another move. That's the low. What do we do? Boom, again, there's a pattern. 618. She likes to come back to 618 and bounce. Now this one here, we didn't have a lot of follow through and we came right back to 618. What does that mean? Well, there wasn't enough demand. The bulls didn't step in, didn't keep the rocket going, fell short. But we're still above 618. So this is not invalidated. This stays where it is. You can still utilize this. So what do you do now? Well, I have a system that I use EMAs. I'm not. This is not a teaching YouTube series, right? This is just to look at coins. But I would use my EMAs. Where are my EMAs positioned? My 7 EMA, my 21, my 50, my 100. How are they positioned? Are they starting to curl up? Are we getting any bear crosses, bull crosses? Where is the major support? Which one of the EMAs has a major support on the weekly time frame? Which one has a major support on the daily time frame? There's a lot of things to consider that I teach my students. That's one portion of it. But if you want to do just price action, just keep it simple. You don't know EMAs, you don't know MACDs, you don't know RSI, you don't know none of that. You want to just look at price action and fibs. You have to use something. Bare minimum, price action with fibs, bare minimum. Okay, let's see. What's next? What's next for me? I'm going to go down to the 4-hour time frame. What is it looking like? What is this? What is the market structure telling me on the 4-hour time frame? Well, you know what's telling me? Nothing but bear. M top, that's a bear, that double top. That's M top is bearish. Okay. Another M top here. Nothing but M tops. Another M top here. Consolidating, breaking down, another M top here. Okay. Well, we need to flip these M tops and we need it to look like this. We need it to look like this. Oh, there's a W. There's another W. Look at this. Right here. There's a W. I need to see W's. But the market is not giving me W's. Okay, that's fine. No problem. When it does, that's when you start stepping in. When do you know? When do you know when the right time of that W is to step in? Well, you look for confirmation. You look for neckline breaks. You look for back tests on the smaller time frames on those neckline breaks. Let me give you an example. Let's see here. Let's utilize this M top as an example. Let me get rid of this just to get rid of some. Actually, I wouldn't have to get rid of that. Let's look at this here. Here's the neckline. Here's the neckline of that. So let's make it blue just so it can stand out. Because from here, what I need to do is, let me do this because I need to identify this on a small time frame, on like a 5-minute time frame. I want to make sure that this is what I'm looking at. So if that's the neckline there, what I'm going to do is this. I'm going to release this magnet. Let me do this little box here just to identify this. Identify this. And let me get in here real quick. And okay, perfect. So I know that's what I'm looking for. This M pattern is what I'm going to analyze. Excuse me. This is the M. That's not the M. This is the M. So now I'm going to go to the 5-minute time frame. See what I mean? I need now I need to look back. It's to find that box. There it is. There it is. There it is. Okay. All right. This was that box. Now, when I see an M like that and I see a breakdown of that M, I'm looking for a back test. On this particular one, I didn't get my back test. All I got was a straight flush. I got a move up close to it, but it didn't quite touch the line. So you know what happened, guys? On this particular trade right here, you know where I would have entered? I wouldn't have. I didn't get the signal. Most of the time, we looked for that break and that back test on the 5 or 15-minute time frame. I didn't get it. If I didn't get it on the 5-minute, I'm not going to get it on the 15 minutes. I don't have to look at the 15-minute. I didn't get it. So I missed the trade. And look, it did play out and it went down, but it didn't give me my trigger. How do I know? You think in hindsight, you look at this and say, oh, I just would have got in here. Well, there's a high probability that it's going to back test. You would have get in here, and then you would have been underwater. Then you're wondering, oh, what if it reclaimed? Why? Next trade, 10 minutes. 10 minutes. You jump on the next trade. So honestly, I would have missed this trade, and it would have been a good trade. It would have been a hell of a trade. But as a trader, the people who are experienced trader listening to this, you know what I mean. There's some trades that you miss. Check this out. It actually did back test, but way after that. But again, I would have missed it. But look at what it did. We put the M, then we put a W. And look at what we did. What did I tell you about Bitcoin? There's that sweep. What did we talk about on Bitcoin? Remember the sweep I told you about, that W on the daily, that we can come down and we can sweep it? Look, we swept it. There's a W. Because we have a W working right now on the daily time frame of Bitcoin. It doesn't mean it's going to play out, but there it is. It's the same structure. This is Dogecoin on the 4-hour time frame with a similar market structure as Bitcoin on the daily time. Market structures are market structures. It's irregardless of the token, irregardless of the time frame. None of that matters. You just have to recognize the market structures. That on the 5 minute is the same thing. Look, you can go to the 5 minute time frame, and I'll show them to you all day long. Look, 5 minute time frame. Let's go back here randomly. You can look at, let's see here, 5 minute time frames. We've got no real distinctive, just a lot of consolidation breakdowns here. Let's see here. Let's see some market structure that actually turn things around. This one did not have a W that I would say that it's a very definitive one. So nothing here yet. Let me look up in here. Here's a double top. Here's a little bit of a double top right here. You can kind of see it. Look, here's a neckline of that double top right here. Look, there's a neckline. We broke it, and look, we back tested it right there. Look, there's a neckline. There's 1, 2 humps, breakdown, perfect back test, came back down. Back tested again, fake deviation, boom. You would take the trade off of this here, down here. This one would have been a good trade. For me, personally speaking, this one would have been a good trade. Because here's the thing, in hindsight, you see this. In real time, you don't see this. So I would have taken this trade on that rejection, jumped in, would have got out somewhere in here. If I'm speaking honestly, would have got it right here. So it wouldn't have been a very big trade. But that's what happens sometimes. That's what happens. However, knowing the way I trade, I would have saw this. Oh, we're losing it again. If we reject off of here, I'm going to wait for confirmation because I just got out of a trade that looked like it wanted to go back up. I wouldn't have got into, but I wouldn't have got in here. I would have got in here because now we got follow through. We got follow through. And that's realistically how people trade. Everybody wants to think that, they caught the very top. They sold here and they got back in here and they sold here. No, you're not going to do that. But you know what? I don't have to lie to you to try to sound like I'm a know-it-all. Because at the end of the day, I don't care what you think. I don't care what you think about me. I don't post clickbait posts because I don't care what you think. All I care is, and all I worry about is my ability. That's it. That's all I have to worry about. So this trade I would have taken this trade on this candle here and wrote it. Let's see. That's Doge. So I don't know if and let's see here. This was not going to be a learning lesson, but so Doge, I guess, like I said, we have to wait for a you know what? Look, we have a W here. I don't know if I talked about that. I might have missed that because I was so focused in trying to teach you what to look for in those smaller time frames that I'm missing this. I don't think I talked about this. This could very well be a W. So let me get rid of this here for a second. Let me get rid of this. Actually, let me move this here. There it is. There's a structure. There's that structure. So this could possibly turn into a W. I don't know. We got to wait for the market to tell you. We got to wait for the market because another thing you want to look for is here. You want to look for this point right here. That could be a point of resistance. Why? Because it was strong support. It was already resistance here. Strong support here, strong support here. Look at all the support here. It's the inverse. You want to look for strong support, which may be strong area of resistance. Confirmation of this going to play out is right here. Confirmation is going to be here. Break out of this neckline. You come in here, you break this neckline, you flip this neckline on those smaller time frames. There's your trade. There's your confirmation. If you don't want to step in to this market structure and you don't trust this market structure and there's not a signal, there's not a trigger for you, here's a confirmation right up here. But not just blindly. Lower time frames give you that, make sure it's consolidating, make sure it gives you that trigger that you need to see, and you take it. But good chances are it flips this into support on the lower time frames. It's a trade. It's a trade. But it's not a guarantee. All right, let me look at something else. THETA. 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 Okay, let me go to the weekly. All right. So let's see here. We had one move up here. Here's a swing high. Let's go here. Let's just see what, as far as fibs are concerned. I don't know if I can take it off of here yet. I cannot use this as my bottom of my fib if I don't know if this was a retracement here. So let me show you what I mean by that. First thing I got to do, I got to open this up here just to make sure. As long as it's respected, yep, it is. That was valid. Okay, so which means that we got here and we got here. There we go. Oh, there we go. Perfect. So we had one retracement. We had a nice move from here to here. Retraced right into the golden pocket. Next move, boom, we came right back into the reload zone. We bounced off 706 and we're here. Okay, what's next? Again, we go back to the smaller time frames. But in order to answer your question quickly, that's what I'm looking for. Let me see here. Okay, we had a nice little bullish, little nice consolidation, bullish move. We try to break up above here. I would say this would have been the neckline here. We came back, we back tested the neckline there. So right in here, I'm going to use these candle bodies. Back test, we failed it. Now we flipped it. Okay, so my focus is going to be right here. My focus, actually, let me go to the smaller time frame, excuse me. Let me go to the 4 hour real quick. Here's a 4 hour. I need to see a flip of this back into here. We flip this back into here. I'm willing to take a risk. Manage it. Keep it small. Keep the losses small. If not, if we cannot break, I'm looking here. Come down in here, in this area here, or even the bottom of this here. Even the bottom of this here. In any place inside of here, show me a structure. Show me consolidation. Show me a reset of the RSI in the lower time frame of the MACD. Show me a bull divergence. Show me that the MACD is moving up while the price action is going down. Show me something like that. Let's see what the MACD looks like on here, actually. I don't see any bull divergence. But let me see the smaller time frames. Here's one. Now, you have to understand bull divergences on time frames, they matter. Because if it's on a lower time frame, the reaction of that bull divergence is not going to be as significant as you think it's going to be. Where on a higher time frame, the breakout of that bull divergence is going to be much more significant because the price is going to be much higher. So here we have a beautiful, absolutely beautiful bull divergence. What do I mean by that? Look at the momentum coming up here. Yet the price action is sideways. High probability this is going to break. I look at this and I want this coin. I want to trade this coin. I'm going to take this trade. I'm going to take this trade the moment it flips that red that I told you about. Because it's very clear on the high time frames that this is flipped below resistance. It's very clear. And look, on the low time frame, we're consolidating. But we do have a bull divergence. So this may sway for me to take a little bit more of a gamble than I normally would with a very low amount. Just because it is consolidating below it, but it's a risk that I'm willing to take because of this. Understanding that this breakout may only mean that we go up to maybe here. So it is not much. On a 10x leverage, it may be worth it. But if we were to get this type of bull divergence on a daily time frame, that move is going to be much bigger. Much bigger. So hope that makes sense to you guys. So I like this. I like this for on the low time frames for a little bounce, little scalp trade. Great. For a higher time frame trade, not yet. I need to see more for a higher time frame trade. I need to see some of this here reset a little below. I need to see some bull divergence. This just nothing but M's. Look, lower highs and lower lows. We need to flip that. So it's not there yet. It's not ideal. VELO, VELO, USDT. Let's look at this here. Jesus. This came really down and consolidated. Now, here's the thing you want to look at this with this type of project. It already had its glory day. Okay? It already has glory day. What you want to focus on right now is, could this come up to at least right here? Yeah, it can. Are you expecting this to go all the way to all-time high? If you say yes, then you have to research this project and find a reason why it'll go there. And not just because the dev said so. Because the devs, they created this project to make money. Always remember that. So how do you protect yourself? Well, you want to do this. Here's just a quick something real quick. You want to look at, do they have utility? If it's a no, go back here. Go back to 4 years ago. Were they talking about creating a utility? Yes. They didn't do it when they had all the capital here, when they had all the capital here, when they had all the capital here. 4 years went by and they still have nothing to work. Stay away from it. Walk away. Walk away. Because all they're doing is dragging the promises. Yes, I'm going to put a ring on it. I'm going to put a ring on it. I'm going to put a ring on it. It's like when you had all this money, you were going to put a ring on it. Now that you're broke, now you're going to put a ring on it? Really? With what? With what? Look at the market cap up here, and then look at the market cap now. If they didn't create a utility when they were flush with cash, you think they're going to do it now? No, they're not. The probability is against you. Now, if they do have a working product, great. That's still not enough. Now you have to research what type of product is it, and is there a new player on the scene with the same or better, cheaper, faster product than them? Who is their competitor? And you know what you want to do? If you believe in this project that much, find out who the competitor is and get a bag of them. Or if there's multiple projects that have the same type of project, load up on them as well. Because people like the new and shiny stuff. They don't want to buy the used cars. They want to buy they want the new car smell. And most likely those new products that came in that do what this people do, they copied it off of here. They had 4 years to copy, perfect it, and make it cheaper, quicker, and better. So just keep that in mind. Not every project who had its glory is going to go back to its glory. A lot of them are just going to go back up to like 382, 618. If they're really, really good, 618, most of them go back to 382. And then they come right back down and they fizzle away with your money as well. So something just to keep on. I don't know what this is, what they do or nothing. What the advice I give you works for anything. SUI. Let's look at SUI. This will be the last one, guys. I'm tired. I've been an hour and a half already on this thing. SUI. Let's see here. Okay, we know it's new. Did great. So let's do this here. What did it do? It came down. Okay, it did close below 786. Okay, great. Did it hit my golden 618? 886? Yep. It hit 886 and bounce. Great. I love it. I love when a coin goes to, that's when the institutions step in and say, we're not going to let it go below that. We're going to step in. And it did. Stepped in, it bounced, reclaimed 786. Came back up here, put an M top. Look at this. We swept the highs. Nothing new. Swept the highs, came back down. Now, on this M pattern, what do we do on this M pattern here? Right to 706. I'll get rid of that. Okay, and we bounced. All right, great. No problem. Great. Now, what's next? Well, whenever we have a downward pull and we have a potential triangle, that's a bearish pattern. That means it's probably more likely going to break down. Okay, that's a bear. I believe it's called a bear. I'm not very good at the exact terminology. I think it's a bear pennant, but please don't, or bearish triangle. Look it up on Investopedia. Investopedia or Google it, and they'll give you the correct translation. I don't need to know the translations. All I need to know is I just need to recognize a pattern. That's all I need to do. I need to recognize a pattern. So this pattern, to me, I recognize it as a potential bearish pattern, which isn't too bad. You know why? Because we bounce off of here. So we may bounce again and do what? Get a W. That's what I'm looking for. I'm looking for an entry. Why? This is a new coin. Met its objective to the downside. Market maker stepped in. Institution stepped in at 886. Pumped it. they took profit, they're going to do it again. They're going to do it again. So if they do it again, where's the next move that I'm looking for on here? Let me see here. Let me see. I'll tell you right now. Here's where I'm looking, right here, 8.77, right in here. I'm looking for this to go to $2.85 before the next retracement, before the next move to the downside. That's where I'm looking at, right there. So for me, I look at this here. We respected all of these fibs. Each one, every single one, reclaimed it. I mean, look at this. Look at this. You want to see how accurate this is? Let me show you. Look at this beautiful flip. Came right in here, found resistance, flipped it right into support, came back to the next one, hit it, came back around, back tested, lost it, came right back down to 2.618, consolidated, reclaimed it, right back into 3.64, right into 4.669, back tested, continued to go, ran out of steam, came right back down, right back down to 2.618. Next move, now we're putting in a nice, hopefully, a W in here. However, probably a little bit lower. Could this be a reversal bounce? It could be. Could this be a lower high? I don't know. Let's see. Go into here, go into right there, go into continuation rule. Yeah, it could be. This could be a higher low because we did not close below 0.50. So we put a low, a high, higher low, possibly a higher low. Now we put a W in here. We come back up. Hopefully we put a higher high. Then we start that structure. We start building on that structure. Everyone wants a big green candle. Doesn't work that way. Algos don't work that way. You need that. That's why I cannot emphasize enough. You don't need to know understand market structure, and it's going to eliminate a lot of the indicators that you're having trouble with learning. Learn market structure first, because once you know market structure, all those indicators are just a complement or a confirmation or a confluence on what your market structure is telling you. Remember that. Play this back. If you need to listen to it, take notes. Been doing this a while. Am I always right? No. But I am right more often than I am wrong. And these market structures are super helpful until you learn other indicators that help you become a better trader, help you to find confluence in your ideas. And that's what these indicators are for. They're not going to tell you exactly what's going to go, but when you have different indicators that can back up your thesis on what you see on the market structure, then you have a better chance, a better probability of succeeding in that trade. All right, guys, I'm going to end it here. Hope this was helpful. Hope you guys liked it. I'm going to try to do this more often. I would like to get into the habit of doing it. It's a little difficult. I spend a lot of time with my group, teaching them a lot, and so I'll try my best. I can't promise anything. If you're interested, guys, come check me out. bleedingcrypto.com. That's the website. You can sign up month to month if you want. Try it out. See how you like it. Go from there. I do these videos almost every single day. The past couple of days I took off. I'm still around on my Discord 7 days a week. However, the morning brief videos that I do on a daily basis, sometimes I don't do them. If there's nothing going on in the market, I'll skip a day or two. If there's nothing to report, why am I going to waste my time? Why am I going to waste your time? Right now, we already have a plan in place, and we're waiting for that plan to execute. We have our validations, and we have our invalidation for Bitcoin right now. And until one of those two trigger, we don't know what our next move is going to be. The trigger of that invalidation or invalidation is going to dictate what our next move is. We don't dictate to the market. The market dictates to us. And that's something that you need to learn to wrap your head around. Thank you very much for your suggestions. I will try to get to other coins on another video. Have a good day.